today's video, we're going to talk about how we are about to see interest rates drop and buyers about to start doing the Birdman hand rub. Stay tuned. What's going on? It's your boy Marv, your brother, your uncle, your favorite realtor's favorite realtor. Super duper excited to jump into today's video because of course I'm a real estate agent. This is what your boy loves to talk about. And interest rates are dropping in large part due to a lot of the bank failures that we're dealing with right now. Let's just jump right in. I want to share my screen here and talk about today's interest rates right now. So interest rates are currently for a 30-year fixed mortgage. You are looking at 6.55% in a 30-year interest rate. Now, that's a 20 basis point drop, y'all, from yesterday's interest rate. And a large part of all of this is, because of what we're dealing with right now. So some of the things that, if you're a real estate professional, some of the things that you need to be doing right now, getting on the phone with your clients that felt like they were, they just can't afford nearly 7% interest on a home. And relatively speaking, 7% is not really out of the realm of what folks have paid for a home. Many years ago, interest rates were a lot higher than where it is now. But a drop is obviously something that's a good thing because the data and what the Fed were looking at doing was they were not interested in dropping rates anytime soon. So because of what's been going on with the banking industry right now, it's usually a domino effect as it relates to, interest rates and what's going on in Washington and all that. And depending on whatever your political leanings are, and listen, your boy is politics agnostic. I am equally critical of both sides, but what I do pay attention to is the money and the flow of money and how, whoever it is, a Republican, Democrat, or whatever, what they're going to get done in order to move our nation forward. I did another video, which you can see here, talking about the failure of SVB Bank, which was an acronym for Silicon Valley Bank. That was a bank that was solely or mainly focused on tech entrepreneurs, startup companies, things of that nature in Silicon Valley. And so they recently failed because essentially there was a run on the bank. Folks were hearing that this bank was having some issues from a liquidity standpoint because they put the large majority of deposits into long-term treasury bonds that had a maturity date very far in the future. So what ends up happening is when you put your dollar in, 90 cents of that dollar is loaned out or invested or whatever by your bank. And so what this bank did, and I won't go too much into it. Like I said, you can check out the video that just popped up here. The banks invested that money into these long-term treasury bonds. And the benefit is that if you leave that money there, it's relatively safe because bonds are on the safer part of the investing world. And so the thing about it is that if you liquidate those bonds, if they're what's called long-term treasury bonds, you have to leave them for a set period of time. And if you liquidate those assets before that bond maturity, then you end up getting less than what's called par value. So that's what ended up happening, is that a lot of investors and people that had bank accounts, their large cash holdings with this bank, were essentially trying to get their money out. So what ended up happening is the Fed, they shut that bank down temporarily, and they have been on a witch hunt for any and all banks that are out there that are, in large part invested in more riskier things. And so there was another bank, I won't go into it for this video, but it invested a lot in the stable coin, which is a cryptocurrency kind of thing. I'll let you do your Googles on that. But that bank got shut down. So anytime there is an issue with what's called, interest rates going up, what happens is that makes bonds or bond yields, which is essentially the interest that you get from investing in a bond, go down. So when bond yields go down, it essentially affects how mortgage interest rates are, measured. This is great news for buyers. Obviously, home housing market is somewhat stabilized. So what was keeping a lot of folks out of the game, though, was just how high interest rates were getting. So I would suggest, if you are a real estate professional or someone connected to the industry, you definitely need to be getting on the phone with your buyers that have been feeling like they were just, they can't afford the payments, even though the housing market we're not seeing any deals on real estate per se. You definitely can get a lot more from a concession standpoint on your next real estate purchase in many markets. We're not seeing too much of the multiple bids, multiple offer situations. Again, your market may be a little bit different, but in large part, we're seeing some leveling off with the real estate market. But what was the issue was the fact that interest rates were still ridiculously high right now. It was raised, of course, to stave off inflation, or at least to try to stave off inflation, which is what we're currently dealing with right now. So 6.5% right now, 30-year, that's that's amazing. Obviously if it can get down, closer to the fives, we may be in business. We may really be in business, and we may see more and more buyers come out of the woodwork that felt like they just couldn't do it. But a couple of a client of mine that had her eyes on a particular home had reached out to me indicating that there was somewhat of a significant price drop on a particular home that she was interested in. So you add that with the fact that interest rates now are dropping. We don't know for how long, and we don't know for how far they're going to drop, but they're dropping. So that's something that you want to be aware of. And for my real estate investors, if there was not a lot of meat on the bone as it relates to a particular home you're interested in purchasing, because what your payments were going to be with the current interest rate being where it is versus what the potential rent was going to be if there wasn't a lot of meat on that bone, which we're dealing with that as a company right now. We're like, man, I'm telling the story actually right now, very much interested in two duplexes. As a company, we were very, very interested in getting after it because I knew I could get it on at a really good price. It was it's an off market kind of situation that we uncovered, and after just crunching the numbers, it just was not enough meat on the bone. It just wasn't. And if my goal it was appreciation, then that may not be a big deal. But my play with these particular duplexes that we were interested in taking down is strictly that cash flow. And so as interest rates lower, that's going to put a lot more meat on the bone if you are able to find a property, whether it's a single family, duplex, triplex, whatever, that you're able to obtain and get a regular mortgage or whatever on it. Obviously lower interest rates mean more money in your pocket as the investor. So I'm keeping a close eye on this, and I know many of you are as well. But let me know in the comments below, what are your thoughts on the fact that interest rates have dropped? Is it enough of a drop that you feel like a lot more buyers are going to be inspired and motivated to get back into the game? Would you like to see interest rates drop a little bit more? It's a strong possibility that it can. It's a strong possibility that it will, especially if the bond market does not start to level off. It's something that we're keeping an eye on. Mortgage rates based on the 10-year Treasury, by the way, they actually are at a 1-month low, according to CNBC. I'm just kind of reading on the news of it right now. But yeah, I mean, we were literally looking at 7% interest rates 30 days ago, less than 30 days ago. So being in the sixes is definitely a good sign. But again, I'd like to see interest rates drop, somewhere in the fives before I really get super duper excited. But this is still great news, and it can make a big difference because essentially, according to CNBC here, if you were looking for a $500,000 home and you put down 20% on a 30-year mortgage, your monthly payment is actually going to be $128 less than it was this time last week. So if you quantify or you multiply that over 12 months, that's quite a lot of dinero in savings just by a drop in interest rates. So we're keeping our eyes on it. And I suggest if you do not have a real estate professional that you reach out to me. I have contacts and agents that I partner with in all 50 states. So if you've been rocking with this channel for some time, we're over 300 subscribers, and I'm humbled by that because that means 300 of you have found this channel to add value to your life. And you have really, invested in the long-term success of this channel by subscribing. So my hope is that if you've been watching this channel for, more than one video, go ahead and subscribe, because your boy is going to come at you every single week with real estate content, money content, tech content that's really geared towards real estate professionals and helping them become more tech savvy and to leverage the power of social media, video here like on YouTube. If you're a real estate professional that is not with EXP and you have considered learning more about the EXP model, go ahead and book a call with your boy. Click the link in the description of this video or in the show notes of this podcast if you're listening on your favorite podcast platform. Let's have a conversation. Let's talk about your goals and your needs and how through my partnership with eXp Realty can help you achieve those goals. And as I mentioned, if you are interested in buying, especially now with interest rates being where they are, and you'd like to find the Marvin of your particular city, of course, if you're here in Atlanta, Georgia, or anywhere in Georgia, I'd be happy to directly assist you. But I do have partners in all 50 states. So click the link below to learn more information, and I will catch you guys on the next video. Talk to you soon. Are you a real estate agent looking to jumpstart your career? Join our online agent network and gain access to the support and resources you need to succeed. One of the most effective ways to attract clients in this industry is through social media. And I can tell you, in my entire time as a real estate professional, I have not knocked on one door, and yet I've still generated several $1 million worth of sales per year. And our team is here to help you do the same thing. Click the link in today's show notes today or visit IamTheTribe.com to learn more about this amazing opportunity.